iPhone and Android devices.
James Knightley, senior economist at ING in London. Good morning, James. Glad to have you with us. So if German GDP was up 0.3% in the third quarter of last year and then wrapped up with only a 0.25% growth, what is that telling us?
Well, yeah, I mean, today's number was a little bit disappointing, and also Germany actually recorded a slight deficit for 2013. There was a hope that we'd see the second fiscal surplus in a row, but that hasn't been achieved. So a slightly disappointing end to 2013. But, you know, unemployment remains very low, and employment growth is actually picking up quite considerably, and private consumption numbers are looking better as well. So, if anything, you know, yeah, the fourth quarter wasn't great, but as we're moving into the first quarter of 2014, we may be seeing a bit of a stronger domestic demand story in Germany, which should be good news, not just for Germany, but also the Eurozone as a whole, and offer further signs, I believe, that the Eurozone can continue.
Pause that right. Something interesting here, just rolling this forward a bit.
Pound is down, the euro is down almost 0.5% this morning against the dollar. Where are those currencies headed, given all this news out of here?
Well, I think the euro is probably going to be the underperformer this year. Our currency team are very optimistic on the dollar. They think we think that the non-farm payrolls number last Friday was a one-off. We're looking for the Federal Reserve to continue the taper and get that concluded by the end of this year. And we're looking for interest rate rises through the middle part of next year, and the US to grow pretty strongly as well, close to 3%. So that's an encouraging story, whereas, as we discussed, the European story is still pretty lackluster. Growth is minimal, about 1%, and if anything, the ECB is skewed towards more stimulus. So we think euro-dollar could head down towards the 120 mark by the end of the year from the current 136 level or so. I think also against the pound.
Did he say $1.20? Oh, the humanity. All right. Welcome in from Sunnyvale, California. I'm Mark Vierra. Going to go on a tour of some basic technical analysis. I'll go over just basic trend lines, some chart patterns, some moving average, fibs, and of course volume. We'll look at some risk off US dollar and treasuries, and then we'll call it a video. Starting off, we're going to look at our long-term monthly, and you know, I'm always looking at the S&P 500. That's something I'll be focusing in, and this is what I'm always looking at to show you in the videos. So this is the same chart for several weeks now. I have not moved this trend line. I just want to have it represent where it poked above here, and currently we are, you know, below this resistance. Now the candle we're looking at is let's see if I pronounce it right, Haramai. It's a bearish candle, but if you looked at statistics, it acts as a continuation majority of the time. Many of these bearish and bullish candles don't do what they're always supposed to do, or what you would think they were going to do. In any case, I'm still looking at this trend line as an ultimate major support, and like I stated, I don't think, you know, they were really going to get down that far, but I just got it marked down as wow, that's a pretty low, maybe an opportunity. So that's our monthly chart. Intermediate term, let's just open this up quickly. This gets you a outward view, the trend lines that I've drawn. I zoom in, I've got this line, support at dash pivot, and for brief candlestick analysis, we have what is known as a long-legged doji. This is, we'll look at volume and can see more. This came down to the lower trend line, as in my previous video I pointed out that this rising wedge will become lower support, most likely. Pretty good support. And the other thing to note on this long-legged doji is, if we call this about the midpoint right here, we closing above that is a bullish sign. The other thing here also is this pattern, which is a broadening, sometimes referred to as a megaphone. I'm even looking at this on the daily charts. We'll go into the psychology and what a broadening pattern represents. So that's the weekly chart, and that would be your mid-term, intermediate term to longer term look. Last weekly chart, still looking at the potential for, this is a high and tight bull flag, and oftentimes you'll hear me in previous videos speaking about how chart patterns like to do these false breaks. That's my, conspiracy type theory on chart patterns. But I'm still looking at the, this range for this high and tight flag, and this would be, what I would consider a false break. So just that's a weekly chart pattern that I'm looking at. Let's get into daily trend lines. Here is just a zoomed out view of the daily trend channel, and this would be tightening in on a trend line channel wedge, a little more zoomed in kind of focus. Noticing here the higher lows, and I would expect that this trend line channel here in the future will be paid close attention to. It will be respected, I believe. Let's see, what else do I want to look at here on the daily? Just a quick look at moving averages. Nothing much to see. We can see some consolidation going on between our near-term moving averages and our, let's look at the Bollinger Band, is contracting, and we're kissing the 20-day currently. We broke below the 20-day, and that was bought up, and that's just moving averages. What I really want to show you is this fib here. Let me open that up real quick. The intermediate daily fib extension, this is something I always point out, that the 50% is an important level, and that's where we're looking at what you would call the beginnings of a double top. Now I always want to point out with chart patterns that until it price breaks below this level, see, this would be your measurement between the lower valley and the peak. You subtract that from this point here. Pattern's not a pattern until it breaks below that. So I don't want to call it a double top or put measurements until I see that. In any case, what I want to show you now is above the 38% and between the 50%, this is where our tight range has been. Get into this tweezer pattern here in patterns, but the next Fibonacci extension, let's open that up, zoom in. Here I'm going just from this is more of a near-term look, so I'm going from that low to this high, which would be the same as this high. I could actually have moved this over. It's nor here nor there because it's about the same level. In any case, we draw our extension back to the ABC corrective, little small pullback that we had, and we broke above the 23 and the 38, and in this area is where we're finding the major resistance going on. Finding the support at the 23% I think is important to note. That's my Fibonacci extension. It would be this retracement here, and from the near-term low to the high, 23% lost support, but right at the 38% there was support. And of course the 50% would be the ultimate. This is where I think you're going to see a majority of buyers or sellers, depending on whether you're looking at an extension or retracement, where that would step in. So that's Fibonacci levels. So with a pretty tight range that we had, we didn't have much movement. You'll notice that I haven't really changed too much in terms of trend lines, and of course the same thing would apply to chart patterns. There's not much change going on. Last week I was focusing in on this bullish flag, okay, which we did break above that, Also, this was another broadening pattern right here. And the thing about broadening patterns is they're most often end up breaking upward breakouts the majority of the time on these broadening, or I hear them called megaphones. That's fine. In any case, upward breakouts mostly on this megaphone broadening type pattern, and this happens to be right angled and descending type of broadening. Let's see. This is a really good pattern to look at. All right, it is a pretty reliable, pointing out a bottom. Okay, we sold off, and that was bought up the next day. That is a very bullish pattern. I always pay attention to these tweezers. Tweezers are great to show us where the near-term bottom would be. For candlesticks, Thursday we had, this is a hanging man, okay, and consequently we had a bearish candle here. The inside down is a 3 candle, so we would be looking at these 3 candles, and that is usually a bearish pattern. I wouldn't call that so much of a reliable kind of thing. I could also point out that if I did some candle blending with these candles here, in other words, if I took and I moved this one over on top of this one, okay, and then I moved this one over here, below that, I would have a tweezer type of top. So we're marking out a bottom range. We're marking out a bottom here, and we're marking out a top here, and in between would be our range. And what is that? How does that help us? Is it gives us a trading range. And well, there is also something else I could point out too. That if let's take our range again. Here's our upper and lower range, and let's call this midpoint. Midpoint's always important. Of course, we closed the week Friday. We didn't get below midpoint. So at this point, I could say that it's more bullish and bearish, but we'll find out if we get below this midpoint. So below this midpoint, I would say we're going to move lower, see lower prices. We'd be bearish. Above that, if we hold that as support, that would be bullish. So midpoint of candle ranges are important. Last thing before I move on to, I also want to, we do have a bullish. This is a pretty small flagpole, but we have a bullish bull flag too. That's in the background. Now, getting into volume. Volume is giving us a pretty good confirmation to my bullish statements here. Let's see. Let's look at volume. Volume by price and time. We have this is an important pivot, and this volume node has been growing. Last week I've been saying that this could end up being a new point of control. It's not yet in terms of a 3-month point of control, but it is a good pivot point. Currently we are below that pivot, and this finding support on the upper value area in this area of little interest. I think that there is some good bullish reasoning behind that. Because that was bought up, okay, on this candle right here, that's above this. This is little interest being paid attention to that price. So finding support off of that, I think, is bullish, and that I would expect higher prices. And in the intraday, I'm going to look at some intraday volume. It's pretty important. But I suspect this high volume node will be a new point of control, and the slight volume interest increasing on the move lower. So what I'm seeing is we have, draw a straight line, have a decreasing volume by time, okay, on this move higher. Consequently, we saw some lower prices. So the daily chart is kind of neutral in terms of confirmation, but as I promised, I want to show you the intraday, because that's where it gets really interesting. And this red volume right here, this is institutional interest. Okay, let me throw that up there higher. That's what I'm looking at on the intraday. volume by time. Very last hour of the day, this candle is closing above midpoint, above the point of control for the 10-day. Means that these prices are being bought up. Okay? That's institutional interest in that price. I think that's a bullish sign. Because what they're doing is they're buying into this weakness. Alright? You know, there is strength is found in the moves lower and weakness found in the moves higher. That's volume spread analysis. So take a look at our risk off assets. Here is U.S. Treasuries, and this is a bit of a gaffe on my part from last week. Let me just go in here, and I have, you know, I was looking at this lower yield and emphasizing more, and this is where I think my own bullish bias, you know, works against me. And this is something that all chartists have to pay attention to. Is you got to try not to inject your own bias. But I was looking at this lower yield and really discounting this strength, this liquidity flowing into Treasuries. And then what happened? Monday morning is we had a big sell-off, and I you know. That's something that I should be paying more attention to in terms of strength in Treasuries. Means that there's jitters, global concerns, all kinds of different reasons why investors would move into Treasuries. It's safer fixed income. But I'm just seeing this as really very strong looking Treasuries. Okay, we're seeing, I think Treasuries are going to be pretty stable. I don't know how much more I want to look at Treasuries right now, but I do want to point out that I'm still concerned here with yield. And I think this lower yield is going to be attractive for stocks. Okay, get a better return. Just pretty basic stuff there. Now, U.S. dollar is also looking pretty strong. We're getting this rising wedge channel, and we could look at the euro. We'll have the opposite. We have a falling wedge on the euro, but I see nothing but strength. We might see some of this type action here in the coming weeks on the U.S. dollar. So, what does that mean? If you have money flowing into U.S. Treasuries, you have money flowing into the U.S. dollar, that should be bad for stocks, right? Not necessarily. I think in a perfect world, you should see good news should affect the U.S. Treasuries, you know, U.S. dollar and stocks. I would love to see the day where they all moved in tandem instead of having this crazy risk on-off, you know, convoluted kind of capital market situation, which it's understandable, but really, you know, good news should affect capital markets all the same way, I think, in a perfect world. In any case, I'm going to take a look at the euro. This has been a good trade for me. I had a short position up here. I'm still holding the last lot. I've taken profit. I've booked a bunch of pips. But I'm holding on to that last lot. I was looking more at down lower in the $1.30 area to put in a very wide trailing stop. That's my trade management for this week. Not much else going on. You know, here it is. This is the last remaining lot. I'm up 303 pips, so not in any hurry to get rid of that last lot. We'll see what happens. Trailing stop, very wide one, and that will be what I'll be looking to do in the next few weeks. Probably isn't going to be anything done about that anytime soon. Let's see here. Of course, you can find plenty of valuable information going on at subreddit StockMarket. You want to check that out. And you can find me posting my trading log at HotStockMarket.com. And that's it for a video this week, and hopefully I'll see y'all on the boards.